Hello everyone, welcome to the seventh lecture of our Sure Short Topics discussion series of the RBWM paper. Today we are going to discuss the important retail liability products. All of these topics that we are discussing, these are for the May 2025 cycle and these are very important. Definitely questions will be asked from these topics, so make sure that you do not miss any of these videos. For that, like the video and subscribe to the channel so that you do not miss any of these updates. We have already covered the other important topics. Today we'll be discussing the important retail liability products. So we have the demand deposits, term deposits, we have under the demand deposits the savings account and the current account. Then under the fixed deposits, what are the different provisions of the fixed deposit? We have also the two-in-one account, recurring deposit. All right, so basic features of the demand deposits we already know, that are withdrawable on demand, which are payable on demand, and it can be withdrawn by the customer at any time, right? Technically, the withdrawals can be effected even by writing a letter to the bank, filling in requisite forms, or even through the ATMs. These are something that we already know. Under the demand deposits, only the financial intermediaries are permitted to accept the demand deposits, and such deposits are repayable on demand. That is why they are known as demand deposits. They can be withdrawn by issuing check or any other recognized means. Demand deposits can be divided into the savings account and the current account. A bank with higher CASA deposit ratio is better placed to perform. So again, the basic features of a savings bank account and a current deposit account. Current deposit account is opened by businessmen who have a higher number of regular transactions. All the types of transactions, deposits, withdrawals, and contra transactions, and no interest is paid. These are the main features of the current deposit account. Then we have the different documents which are required. Who all can open a current account? Individuals, sole proprietorship firm. Individuals, they can either singly or jointly open a current account. Partnership firm is also there. Hindu undivided family, limited liability partnership firm, limited companies, cooperative societies, any charitable trust. And for that, certain respective documents are required or acquired by the banks, apart from the OVD, which is the officially valid document, right? And then there are some important operational instructions in the current account as well. For example, it has been clarified in a notification dated October 29, 2021 by RBI that banks may open current account for the borrowers who have availed credit facilities in the form of cash credit overdraft. So if any individual already has availed any credit facilities, either cash credit or overdraft facility, then also current accounts can be opened for them, for these types of borrowers. But there are certain limits. For the borrowers where the exposure of the banking system is less than 5 crore, there is no restriction on opening of the current account. Whether they have availed any cash credit facility or the overdraft facility, if they have the banking exposure less than rupees 5 crore, then there are no restrictions. However, for the borrowers where the exposure is more than 5 crore, such borrower can maintain current account only with one of the bank with which it has availed this facility. Only that bank from which the borrower has availed the cash credit or the overdraft facility, only that bank will open a current account if the exposure is more than rupees 5 crore, provided that the bank has at least 10% of the exposure of the banking system to that borrower. These two points are very important, and these are definitely the topics that are probable, most probable to be asked in your examination by the institution. All right. Next, other lending banks may open only the collection account subject to the condition that the funds deposited will be remitted within 2 working days. This is another restriction. Other banks, other than this bank, where the customer has more than 10% of the exposure, other banks can open only the collection accounts. That too, the collection amount will be remitted within 2 working days. However, in this case, none of the lenders has less than 10% exposure of the banking system to the borrower. And obviously, non-lending banks are not permitted to open the current account. All of these points that we are discussing today are very, very important. So make sure that you understand these points. If you have any doubt, any queries, you can let me know in the comment section. All right. So regarding the notification, earlier it was said that before opening a current account for a company or a firm, the bank should ensure that these entities they do not enjoy any credit facility with any other bank or branch. Why? So that the banks can discourage the likely misuse of such accounts to avoid the credit discipline, right? But then RBI has notified certain restrictions following which the accounts can be opened for these types of customers as well. All right. Another important point regarding these accounts is the transfer of accounts. Customers used to face a lot of problem with transferring of account from one city to another, from one branch to another. To solve this, as per the recommendations of the Damodaran Committee on Customer Service, IBA has given direction for implementing the facility of account number portability. So now the customer is allowed to maintain the same account number even when she or he moves to another city or they shift their account to another branch in the same city. So now the account number will not change. Even if the customer is moving to another city, they will still or they can still maintain the same account number. So this committee is very important. You should remember if the institute asks us which committee recommended the transfer of accounts maintaining the same account number, then it is the Damodaran Committee, right? So how does the process of transfer of account occurs? The account holder is going to approach the branch and the branch will obtain a letter addressed to the transferor branch. Transferor branch is the one in which originally the customer had account, and the customer will indicate where they have to transfer the account to the other branch, to the other city, whatsoever may be the case. Then the letter should be duly signed as per the constitution of the account and it will be handed over to the transferee branch. So now this will be the responsibility of the branches, right? So Damodaran Committee and the process is important. All right. Next, if we talk about a savings bank account, again, the other features, savings bank account is for those individuals who have a regular source of income. They need to make payments regularly like electricity bills, telephone bills, school fees. So, savings bank account helps the customers to make regular payments, and they can also keep some amount in their savings account for meeting their near future expenditure. And savings bank account also offer them some interest. So savings habit is created. These are the advantages and importance of saving bank. Now, who can open a savings bank account? Any person who is legally capable of entering into a valid contract. So here we are going to accept the minors. Minors cannot open a savings bank account, and we can also exempt any person who is a person of unsound mind, right? Now there are certain restrictions on them. Like for the savings bank account of a minor, A person who has not attained 18 years of age, they cannot enter into a valid contract as per the Indian Contract Act of 1872. And savings bank account is also a contract, but savings bank account in the sole name of minor can be opened if the branch manager, they feel that yes, they can operate the account. All right. So there are certain terms and conditions. The minor should be able to read and write. The account opening form should be signed by the minor. But here we are discussing those minors who are above the age of 10 years. All right. Checkbook facility can also be provided if she or he is literate. And if we are referring to those minors below the age of 10 years, what will happen then? Then the accounts in the sole name of the minor can be opened, provided that it is operated by the natural guardians. Natural guardians, that is the father or the mother. Right? So both of these points are important. Other than that, there's a maximum balance to the credit of such account, should not exceed a certain amount. No overdraft facility should be granted in the savings bank account of the minors held either singly or jointly. So, no overdraft facility. So, there are certain terms and conditions which are important. All right, regarding the savings bank account. Then, savings bank account can be opened for literates, illiterates who is unable to write. They should attend in person and affix their thumb impression. Then the name of the account holder, nature of the account will be written in the bold letters. Joint account of an illiterate can also be opened with a literate close relative. However, no checkbook facility should be provided. So these are some points which are very obvious, which are very common that you should know. Then savings bank account are also allowed to the blind persons, to the incapacitated, handicapped, old or sick persons. And regarding the accounts of Parda Nashi women, banks they ordinarily refuse to open the accounts because the identity of the Parda Nashi women cannot be ascertained. However, in special circumstances, these accounts can be opened. All right. Even for the non-individual entities like a primary cooperative credit society, the Khadi and Village Industries Board, agriculture produce market committees, farmers clubs, etc. So these are the important points. And for opening a savings bank account, certain documents are required like the proof of identity, which will be an officially valid document, the proof of address if the address is different as given in the identity proof, recent photograph of the customer, and PAN card, or if the PAN card is not available, then the declaration in Form 60 or 61 as per the IT Act. All right, these are the important provisions. Right? Then monthly average balance, interest payment on daily product basis, all of these things are there. Services which are offered in savings bank account already we know. Another important point is regarding the deregulation of interest of the savings bank account. Previously, the interest rate was regulated by RBI, but now with effect from 25th of October 2011, RBI has deregulated the interest rate to be paid by the bank on the domestic saving bank deposit. So now banks they have the autonomy to determine their own savings bank deposit interest rate. There are certain conditions like each bank will have to offer a uniform interest rate irrespective of the amount in the account within this limit. So savings bank deposit up to rupees 1 lakh. All the customers who are having a savings bank deposit in the bank, they will be given the same interest rate. The bank cannot offer different interest rate to different customers if the savings bank deposit is up to rupees 1 lakh. And above 1 lakh, the banks may provide differential rate of interest, subject to the condition that the bank will not discriminate in the matter of interest paid between one deposit and another on the same date at any of its offices. So uniform rates have to be followed by the banks. Banks are not going to discriminate between two customers having the same deposits in the savings bank deposit account. All right. Then if we move on to the term deposits. So the periodicity of the time deposit, if it vary from bank to bank, maximum periods for which the banks accept deposits not exceeding 120 months, and where a deposit is offered for a period of more than 12 months, then in multiples of 3 it will be made, like 15 months, 18 months, 21 months. Again, even minor, the provisions regarding where the interest of a minor is involved, there are separate provisions, right? The interest rate which is offered on the fixed deposit is more as compared to a savings bank account. The term deposits can also be opened with instructions as singly or payable to either or survivor, payable jointly, former or survivor, and so on. All right. Now, regarding the TDS, deduction of income tax at source from the payment of interest on time deposit. So, as per or consequent to the budget 2019, TDS is applicable in case of interest on the time deposit. TDS will be deducted in cases where the total interest paid or credited on all time deposits in the name of a depositor. In the name of a depositor. So, if one depositor has many time deposits, so all of their interest will be taken into account. So, where singly or jointly it exceeds rupees 50,000 in a financial year in case of a senior citizen, and 40,000 in case of depositors of age below 60 years. So, if the interest which is earned is more than 50,000 for the senior citizen and more than 40,000 in case of others, then TDS will be deducted. The TDS is 10% in case the depositor has furnished the PAN card, or 20% in case the depositor has not submitted the PAN card. However, again, the bank FD interest rate is fully taxable in the hands of the investor, and the banks they levy the TDS, which may be adjusted while filing the income tax return. Right? So these provisions are there. Then regarding the renewal of FD, mostly automatically or auto renewal policy is followed. On the date of maturity, such deposits are automatically renewed normally for a similar period as was the original deposit. However, the period of auto renewal and the interest may differ from bank to bank as per their own stimulated or stipulated policy. So if the customer forgets to give instructions to renew the FD, what will happen? The facility of automatic renewal is going to help them. All right. Now, those who have an income within the exempted limit, they may intimate the bank not to deduct TDS from their time deposit. But this intimation has to be made generally at the beginning of the financial year by submitting the form 15G or 15H. Very, very important. Form 15G is for others and form 15H is for the senior citizens. So 15H is for an individual who is of the age of 60 years or more, and 15G is for all others whose total income will not exceed the maximum amount. So if they are under the tax slab, that is, they are exempted, then they can intimate the bank, they can inform the bank not to deduct TDS. And again, at the beginning of every financial year. So this form is required to be submitted for every financial year. All right. So if a person, let's say, has already submitted such forms in the previous years, he will still be required to do it for the current financial year and for every financial year. But such form is to be submitted only for those whose income is within the exemption limit as per the Tax Act. And obviously, the tax limits have been revised now, so the new provisions will be applied. I hope all of these points are clear. Then we have a very important topic, two in one account. Recently, the banks have come up with value added savings bank or current account deposits and the fixed deposit linked account. So we are combining two schemes, mostly a running account like a savings bank or a current account, which offer flexibility. It is combined with the balance in the fixed deposit at the time of need, right? So if let's say I have surplus funds lying in my savings bank account, I can, through the sweep facility, transfer it to my fixed deposit and earn higher interest. Or if there is deficit funds in my savings bank account and I need to make some regular payments, so I can transfer some funds from my fixed deposit to my savings deposit. So this is the two in one account, which offers features of both a demand deposit as well as a fixed deposit. So there are built-in features to sweep the excess balance in the running account to create the fixed deposit. Thus, the depositor is able to enjoy both the liquidity and the higher rate of interest on FD. Now, many names are given by the banks to such facility like super savings bank account, money multiplier, sweep in facility, super saver facility. So, how does the two in one account work? They work on the last in, first out basis, in which the last deposit is broken to meet the shortfall in the operating account. All right. And such a sweep is called the auto sweep. Auto sweep. When from the fixed deposit, let's say there are such accounts in that money in the savings or current account in excess of the stipulated amount, it is swept into the fixed deposit. So from the savings bank account to the fixed deposit, when the amount of money which is left idle in the savings or the current account is in excess of the stipulated amount, it is automatically swept to the fixed deposit and higher interest rates will be earned. This is auto sweep. What if the current account has insufficient fund to meet any regular debit transaction? Then the FD, from the FD, the shortfall amount is withdrawn and transferred to the demand deposit, which is known as reverse sweep. So from the fixed deposit to the savings bank or current account deposit. This is known as reverse sweep. So you should remember the direction. From the demand deposit to the fixed deposit is auto sweep, and from the fixed deposit to the demand deposit, it is the reverse sweep. So how does the auto sweep facility work? It offers maximum returns. The excess amount in my demand deposit will be transferred to my fixed deposit and higher interest rates will be earned on it, right? So balance in excess of the stipulated amount is automatically transferred to a fixed deposit for a particular period. This is known as auto sweep facility. And reverse sweep facility in case of shortfall in the savings bank deposit to honor any debit transaction. The FDs are automatically broken only to the extent needed for meeting the shortfall. The remaining balance continue to earn the higher interest rate. And the FDs are broken on the last in, first out basis. All right. And these calculations are all system driven No manual intervention is required. So the features of both a demand deposit and a fixed deposit is offered to the customer. And that is all. These are the most important topics from our Unit 8 of Module B, which is Important Retail Liability Products. Make sure that you study and you revise all of these topics very thoroughly. We will come up with more such sure short topics for your May 2025 exam cycle for the RBWM paper. If you have any doubts, any queries, you can put them down in the comment section and I will answer all of them. So thank you so much. I will see you again. Make sure that you like the video, share the video, and you subscribe to the channel of Oliveboard so that you do not miss any of these important updates. Thank you and all the best.